very happy morning to all our dear students. From today onwards, in the same chapter, name, admission of partner, chapter 5 of our 12th standard accountancy part 1. Okay, what we are going to start from today onwards? A new question that I know. Last time we solved question number 14. From today, question number 15. No. Question number 16. That is still okay. The number is okay. What we are going to start? I told you in my last session. Yes, the topic specifically connected with closing capital. A very good topic. Till now, we solved normal adjustments, P&L ratio, that new P&L ratio and sacrifice, then goodwill related matters. Now, from today onwards, I can say the last topic of this chapter, but a very good topic. Different situations are there. So, the working note also must. Okay? The topic's name we can say that is closing capital. Okay? Question number 16 of your textbook. What about question 15? See, question 15 is nothing else. It is actually a short question. Yes, it's not a regular 8 marks or 6 marks question. It is a 3-mark question, and from this chapter they are not going to ask you such question in 3 markers. Okay? So instead of solving that question 15, we will directly switch over to question 16. Because in 15 they give just the detail of closing capital topic. But the issue is that for closing capital, actually the things are different as per the adjustment given. So, if you feel that we solved question 15 and we can easily know how to solve closing capital topic, then it's wrong. Because if in the question they give you to maintain closing capital and the adjustment is to be made in cash, then we have to do cash or bank account for that. If they told you to maintain closing capital in such a way that we have to adjust with current account, in that case we have to prepare current account. So basically what I wanted to say is closing capital is not depends on a particular thing. So, if you feel that after doing question 15, we can easily understand the topic, it is wrong. And so I decided that instead of going through such short questions, let's continue the same topic with few long questions. Instead of one short question, if we solve 3-4 long questions, for the same closing capital topic, obviously it is beneficial. Okay? As per the system, let's go through the question first. Question is a bit easy. Easy in that sense, they have not given any particular adjustments related to assets and all the things. The question is somewhat like that. Question 16. Ashri and Anani, 2 partners, sharing P&L ratio in the ratio of 2:1, profit and loss in 2:1. Balance sheet of that firm as on 31/3/17. Here, capital, Ashri and Anani, capital reserve, workman selling account, workman profit sharing fund, 10% loan and creditors. Nothing specifically something new. Okay, it's normal. On the asset side, goodwill, that is old goodwill. building, furniture, stove, vehicles, cash. So again on the assets are also nothing new from the adjustments. New P&L ratio is 3:4:2. So while reading the adjustment, before we do self-tick mark, we must have a spark in our mind. What is it? Yes, new P&L ratio and old P&L ratio. When both are given, always there is a need to find out sacrifice ratio. So first adjustment itself. Second, Hansi, the new partner. New partner will bring 40,000 as capital. Only capital is given. No relation with goodwill. So again itself. Third, interest on bank loan is outstanding for 1 year. Interest on bank loan. Now here on the liability side, 10% loan from bank is given. So interest on bank loan should be there. Fourth, personal expense. See, very good adjustment. Personal expense of partially paid by the firm is debited to P&L account rupees 5,600. Personal expense of partially paid by firm debited to P&L account. So actually it is not firm's expense. It is partner's expense. Okay? So it should be considered as drawings. So do a tick mark, adjustment number 4, in capital of partial. Yes, capital of partial. Normally in capital we do not have adjustments, but here it is. Fifth, reconstruction expense is paid by Aneri 8,400. Now, see in fourth adjustment, partner's expense paid by firm. In fifth adjustment, firm's expense paid by partner. In fifth adjustment, firm's expense paid by partners. Okay? Then, sixth one, fifth should be ticked out again in capital of Aneri. Sixth, goodwill is valued at 90,000. Here firm's goodwill is given. Okay? So itself. Seventh, for this adjustment actually we are working. Partially, say it's closing capital adjustment. Partially and Aneri will maintain their capital in the new form in the new P&L ratio by taking Hansel's capital as base. Normally closing capital is almost similar like this, but read further. For this purpose, necessary adjustment should be made in partner's current account. Okay? Now listen carefully. If you have not read the question properly, and drawing the formats, in that case, definitely you have not drawn current account. So what you used to do, if you draw it in advance, you draw revaluation, capital, then cash bank and balance sheet. Now they say that the adjustment of closing capital should be made in current account. Now you are not given space for that. So in the beginning of this solution, you are confused where to draw current account, what to do about it. So these are the problems. That's what I am saying. Always read question first. And then go for the answer. You have to draw the formats. Here you can check. There is no adjustment in balance sheet. except 1 or 2 on capital and bank account. No adjustment on asset side. And that's why I draw revaluation account of 4-5 lakhs only. Okay? The same way for cash also, no such big adjustments. So only 4-5 lakhs is more than enough. Is that clear? Now, if you have not observed these things, what you will do? You may draw revaluation of 12 to 15 lakhs, then 10 to 15 lakhs of capital account, no current account, almost 5 to 8 lakhs for cash account, and then balance sheet. Now, revaluation account is of 15 lakhs, where it actually is required almost of 5 lakhs. And for current account, we don't have any space. So what I constantly wanted to say, never to do that things. What? Before completing the entire question, go through, and then start drawing the formats. Is that clear? Sure. Again, just go through the last adjustment. Again, I am recommending, go through the last adjustment. Yes, partial money ready to keep their balance, their closing capital, by taking base of NC's capital. Should be in new P&L ratio. Okay? But if the shortfall of capital or surplus of capital, I am talking about closing capital, should be adjusted in current account. And that's why for that only we draw current account. Otherwise there is no need of this current account. Okay? Otherwise what to do if such current account adjustment is not given? What to do? That we will discuss afterwards, because in next question we are going to do the same things. Okay? So let's start as usual from the credit side. That is from the liability side. Capital, partial and 21 and 84. Capital account by balance brought forward 91,000 and 84,000. I know an adjustment is there. 91,000. 84,000. Okay? Adjustment says personal expense or partial paid by firm debited to P&L account. So can I say some drawings for partial? Okay? How much? 5,600. Okay? So here drawings always on debit side, but paid by firm. So here we can write two drawings. To revaluation account. To revaluation account. Why is it so? Let me explain a very good adjustment. It's not easy to understand this. See, for explanation it is easy. Okay, because experience works. But for you people, you don't have the experience of this kind of adjustment. Clear? Personal expense. Now imagine, firm already paid that 5,600. So can I say, firm's profit goes down by that amount because it is considered as an expense when they paid it. Now what will happen? Now we are recovering that expense from partner. So for partner, capital reduced. So debit side. And can I say firm's profit again increased by that amount? Because previously they reduced. Now if they recover the amount, actually again profit increased. Okay? So it should be cross, opposite side. Over here. By partial capital account. Okay, the amount is 5,600. 600. Do revise this adjustment thrice. Both the capital related adjustment. Okay. Next one. That is unary. Adjustment number 5. Reconstruction expenses paid by unary 8,400. Now here, a partner paid expense of firm. In this case, firm paid expense of partner. Here, partner is paying firm's expense. Can I say it's 100% a reverse situation? Okay? And so the entry is also reversed. Here it is debited. Here it should be credited. Here it is credited. Here it should be debited. Okay? So by revaluation account, in analysis column 8,400. Here a positive line. To analysis capital account, $8,400. Okay? Again, I am recommending you 2 times, 3 times, 4 times. See how many times you are doing it does not make any difference. The concepts must be clear. Okay? If you do it for 2 times, the matter ends. If concepts are very clear, it's very okay. Again, let me tell you, just think in this point of view. Here, in this case, firm paid partner's expense. So if firm recovered it, it should be a profit for the firm. For partner, capital reduced. In this case, in case of unary, partner paid firm's expense. So if partner recovered, then for partner it is increasing capital, for firm it is a loss, means a kind of expense. So on that side. Okay, clear? Still if not, as I said, you can rewind and go through the lecture once, twice. And the last option, you are always welcome. You can message me or at the end, you can even call me. Then capital reserve, 14,700. The ratio is 2:1. So ensure reserve contributing partners. By capital reserve 2:1, so it should be 9,800 and 4,900. Very simple distribution. Then workman saving account, workman profit sharing fund. See, all these things are one and the same. What to do of it? Workman saving account. Should it be distributed between the partner in 2:1? Yes or no? No, because it is a kind of provision. It is not a reserve. Okay? So workman saving account should not be distributed. Then workman profit sharing fund again should not be distributed. Barabar? Because again it's a provision. How to write it? Very, very simple. On liability side, first of all, partner's capital. Partner's capital. Partially unary and NC. Okay? Then workman saving fund. The amount is 7,000. Then workman profit sharing fund. Amount is 8,400. Nothing to do about this one. Then 10% bank loan. Here an adjustment is there for 1 year outstanding interest. So 10% bank loan. 35,000 plus outstanding interest 3,500. 38,500. Is there any problem? Very simple. 10% 1 year. So 35,000 10%. 3,500. Opposite event. Because when I said plus debit to outstanding interest on loan 3,500. Is there any problem? Naturally not. It's very simple. Then creditor is 39,900. 39,900. Is that clear? Next one, that is from asset side. Goodwill, 21,000. Should be distributed. See, here current account we are preparing only and only for closing capital. Okay? So, in current account, no other entry will be there. But, the most important thing, goodwill. Here take care. Goodwill having two matters. One, that is old goodwill, which is already given in the question. Second, that is new goodwill, because the word total goodwill of the firm is given in the adjustment. Yes, adjustment number 6. Okay. So what I wanted to say, here old goodwill should be considered only and only in capital account. Only and only capital account. But new goodwill should be connected with this. We'll tell you at that time. New goodwill, the amount is 21,000. So 14,000, 2 is to 1 is the ratio. 14,000, 7,000 goodwill amount. Then very simple, building, furniture, stove, plate, goods, everything. No adjustments. So just we are going to copy the things. Building 20,000, furniture 28,000. Building 1,40,000. Furniture 28,000. Then stock in daters. Stock 18,200, daters 16,800. Again, no adjustment. Stock 18,200. And daters 16,800. Okay, cash to balance brought forward 56,000. Yes, it is 56,000. Okay, from the asset side, only goodwill is to be distributed. Remaining all very quickly, only 5 items, no adjustments. Okay, clear? And that's why I draw this particular format very small. Because no adjustments are there. Is that clear? Here we end the question balance sheet. Now what to do? क्या करेंगे अब? The next step? Yes. Go through this self-ticked adjustment and check whether any adjustment is there except new partners, capital and goodwill. Now in this question you have to think even of closing capital. Okay? Or in different way you can think. Is there any adjustment of revaluation? Here first adjustment, new P&L ratio, so not corrected. Second, and say bring 40,000 for capital. Again at present not taking. 17th I am talking about. 6th, goodwill is valued. Again it's goodwill, so not considering. And 7th, closing capital. So no other adjustment left for the revaluation. So what to do? To close revaluation account. Okay? Here, if you check on debit side, the total is bigger. 8,400, 3,500. So it is 11,900. Okay? The same total. 11,900. The difference, that is 6,300. Here debit side total is more, so we are in loss. Clear? By partners' current capital account, both name, only old partners, old ratio, Shri and Anil. Two is to 1, so 4,200, 2,100. Okay? On credit side, so must be on debit side. 2, revaluation account, 4,200, 2,100. Net comes to 6,300. Is it okay? Now the question of new partners, capital, goodwill, and so on and so on and so on. But first of all, let's take the capital, because that is again very easy. Second adjustment, and say bring rupees 40,000 as capital. Very, very simple. 2, and says capital account. That is rupees 40,000. Okay? And the second effect, obviously credit side, buy cash account, 40,000. Is there any problem? Sure? Okay. Now two matters left. One goodwill, another closing capital. Whenever such things happen, always solve goodwill first. Because closing capital is 99% based on all remaining data. So if you missed any one data, and start calculating closing capital, it will be wrong. It will be wrong. Okay? Take care. So, always first of all go through the adjustments first, except closing capital. Okay? Let's do it. Good way. For that, we need sacrifice because we are old and new both ratio are given. Still working on over here. Okay? Take care of it. Or you can consider over here, it would be much better because we need more space for this. And then for new partners capital or closing capital, we use this things. First of all, sacrifice ratio. Okay, make sure the formula is old ratio minus new ratio. First of all, partially, then unary. Here, for partially, old ratio 2:1 minus new ratio 3:4:2. So 3 plus 4 plus to take care, it is 3/9. 4 unary 1/3 minus 4/9. Okay? Now do it. Do it in your own way because so many times I already taught how to calculate sacrifice ratio. Okay? Take LCM, find sacrifice ratio. 4 partially. The methodically 3 9s are 27, 9 2s are 18, 3 3s are 9. So net it is what it is should be 9/27, or you can say 3/9, or 1/3, whatever you want to. For unary, it is again denominator is 27, 3 9s are, then 9 1s are 9, minus 3 4s are 12. So here minus 1/9. Okay? Minus 1/9 means gain. So the net answer is, can say for partially it is 3/9, for unary minus 1/9. Clear? Any problem about the goodwill? Yes, total goodwill. How much? The second six adjustment, that is rupees 90,000. Okay? We have to find goodwill of both the partners because here it is gain. For unary. So, whose hence is first? Hence's share equals to 90,000 into the ratio is given 3:4:2. So 2/9, 20,000. Then unary's share again 90,000 into whatever the gain she is having, 1/9, 10,000. Is there any problem? Here take care. New partner is not bringing goodwill in cash. New partner is not bringing goodwill in cash. Okay? So we have to debit current account because we are preparing current account. If we are not preparing current account, then definitely yes, should be capital account. But here, that must be in the current account only. Is that clear? Acha. What about Aneri? Here, Aneri's amount must be debited to capital account. So this is the beauty of this question. Huh? For hand C, you have to debit current account. For Aneri, you have to debit capital account. Is that clear? Why? Because we are adjusting our closing capital on the basis of current account. And listen carefully. For that, we are taking Hence's capital as base. Listen carefully. If you have debited Hence's capital account with 20,000, then the net capital she is having is 20. 40 minus 20. And on the basis of that 20,000 you may calculate. Okay? So take care. First of all, let me complete the entries. Then again I will explain with the working mode of closing capital also. 20,000, 10,000. So 20,000 should be debited to Hence's current account. And only partially is gaining. Sacrificing. Only partially is sacrificing. So both 20,000 and 10,000, both should be given to partially. Should be given to partially. So here 20,000, okay, and should be given to partially. To partially is capital account. Okay, not in current. In partial's capital by Hence's current account. In partial's column. Okay, in this kind of question, journal entries of this are really very useful to understand the concept, and we will do it. Okay, this is of 20,000. Now 10,000. 10,000 is of old partner. So 10,000 in capital to partial is capital account. In partial is capital account by Mary's capital account. 10,000. You can check here partial is sacrificing. So both the amount given to partial. Okay. The only thing you have to understand is in case of old partner should be debited to capital account. In case of new partner, it should be in current account. And why it is in current account? Why it is in current account? Just because they told us to maintain closing capital with the help of current account. If such adjustment of closing capital is not given, in that case we haven't prepared even current account. Okay? In that case, and so this amount is to be over here. But in normal case, whenever closing capital with current account, always current account needs to be maintained. And so new partners goodwill, not bringing cash, should be debited to. Okay? Here, next one. Goodwill dot is over. Now, closing capital. Very simple. What they say? Again, a working note is must. Working note is must. Closing capital. New ratio is, what is the new ratio? Because they say it to maintain a new ratio. That is 3:4 is to 2. Here, so by taking Henson's capital as base, by taking Henson as base. Okay, so what you have to do? Just cross multiplication system. Henson capital and ratio. Here capital is, for example, Henson's capital is 40,000. Ratio is 1, rather 2. If 2 ratio, or if it is tough for you to understand, you can do it reverse also. Because for cross multiplication, you are habituated of having question mark over here. Okay? Makes no difference, but still, let me do as per your habit. First of all, ratio. And then capital. If ratio is 2, hence this ratio I am talking about. Capital is 40,000. If total ratio 9, here you can do 3 plus 4 plus 2, 9. If total ratio is 9, what the capital should be? Okay? By calculation, that is obviously the amount, what it comes to? 1,80,000. 1,80,000. Okay? Now you can distribute in ratio. You can distribute in ratio. Partially. Mary. No need, but still, if you want to, then Henson. 1,80,000 into 3 by 9. Because this is the total capital. 1,80,000 into 4 by 9. And 1,80,000 into 2 by 9. So you will get 3 by 9. So 60,000. This is 80,000. 40,000. All total, just to get it, tally 1,80,000. Again, check twice, giving you a few seconds. Okay, closing capital on the basis of new ratio. So that is 3:4:2 here. Then they say taking Henson's capital as base. So if Henson's ratio is 2, her capital is 40,000. If total ratio is 9, then total capital will be 1,80,000. And in that case, 1,80,000 in new ratio. So partially on a Nancy, 1,80,000 into 3 by 9, 4 by 9 and 2 by 9. So that comes to 60,000, 80,000 and 40,000. Is there any problem? Sure? Okay. Now we almost ends the question. Yes. What to do now? Very simple. Very simple. This is your closing capital. So, closing capital means should be written over here above the total. Okay? As 2 balance carry forward. 60,000, 80,000, 40,000. Okay? Still total is there. Okay? Here. Just do total, nothing else. This is your closing capital. So let's write over here. 60,000, 80,000 and 40,000. All 1,80,000. Now we want to close this account because what they say, to maintain this, whatever the plus or minus we have to do, whatever the difference we are having, should be considered in current account. Okay? Is there any problem? Should be considered in current account. Okay? Here, let me tell you how to do it. For example, partially. Here in partially, you are having credit side total 91%, 1,30,800. 1,30,800 and debit side 60, 14. So obviously credit side total is bigger. Okay? In this case, when we are already, listen carefully, when we are already having closing capital, it's not compulsory that credit side total is bigger. You have to check. So here 1,30,800. Same total. Now the difference, including this 60,000. So 1,30,800 minus 60,000 minus 4,200 minus 14,000 minus 5,600. Okay? So the difference is 47,000. This is to be transferred to current account. What they say, to maintain this capital, necessary adjustment is to be made in current account. So 2 partial is current account and opposite effect by partial is capital account. $47,000. So here we end this second part. 84,000 plus 8, 92,000 plus 4, 96,000, then 1,300. So 97,300 is the total on credit side. Now debit side, 80,000, 10,000, so 90,000, 97,000, 99,100. So here debit side total is bigger. Same total. 99,100. Same total. And then the difference should be opposite by Aneri's current account. How much? The difference is only 1,800. The same should be over here to Aneri's capital account. In column of Aneri, obviously 1,800. And for NC, N is given 40,000. 40,000. Okay? So here you can see capital account. Now it's a matter of current account. In current account, nothing else. Just the total. Okay? Just the total. So on debit side, on credit side, Parsley's total is bigger. One by one, let's make. So here 47,000. Okay, so initially the balance to balance carried forward. In case of Aneri, it is 1,800 on debit side. Here also 20,000 on debit side. So here 1,800, here 20,000. Difference 1,800, 20,000. Balance CF. In current account, either side balance is possible. Now this 47,000, because it is on debit side, we are going to write it on liability side. Partially is current account 47,000. This two are on credit side. So here on asset side, can write individually or can write combined in a column also. Here we are writing individually. And it is current account 1,800 and hence is current account 20,000. You can write partners current account title, Aneri, NC, income amount, and then your account. All the things are valid enough. Here we calculate current account also. Now it's a matter of cash or bank. Easy one. 96,000. The same total. 96,000. By balance carry forward 96,000. So here on asset side, cash or bank account 96,000. Okay. Now it's a matter of totaling the balance sheet only. But before that, just go through the entire question. It's a big one, though adjustments of assets and liabilities are not there, still having so many things, yes. So I am saying again, go through it twice, especially working notes, even the capital adjustments also of unary and partial. Adjustment number 4 and 5. Okay? Net, the total of balance sheet. What is it? Don't wait for me every time. 3,20,800. 3,20,800. Okay? This is the total of balance sheet. In this section, again let me tell you, very good topic of closing capital. Go through this through current activities. Okay? 4 or 5 major things are there in this question. One, related to this 5,600 and 8,400. Second, goodwill. What to remember? New partner. If new partner is not bringing goodwill in cash, goodwill should be debited to new partner's current account. If not, then capital account. Means if you are preparing current account, in current account. If you are not preparing, then in capital account. Okay? Clear? About the journal entries. Yes, working on, you are going to do all these working notes. But for journal entries related to goodwill especially. So let's start. If you want to do an entry of capital, then also you can do for sending cash or bank account debited to Hanses capital account. Rupees 40,000. So here capital entry is over. For goodwill, Hanses current account debited. Hanses current account debited 20,000. Unary's capital account debited. Hanses current account debited. Unary's capital account debited 10,000 to Partial's capital account. To Partial's capital account 30,000. Okay? Again, very quickly I am saying the entry, and please do write the entry and then try to post it so you can compare that how we did it in our ledger formats. Again, Hanses current account debited 20,000. Unary's capital account debited 10,000 to Partial's capital account 30,000. Now, if you check the posting properly, if you are having the base of 11, at least 50% base, in that case also it becomes very easy for you to understand the concept of goodwill. Okay? Clear? Let me tell you, a good question, and still few good topics are there in this chapter. The biggest beneficial point for you is you are having ample of time to do all these things. Clear? So with this, let me take a break over here. And for you people, after going through the remaining subject lectures, I am sure that you will start revising the entire topic. Yes, preferable today at least 2 times. One, regular in rough work or in class work. Then after 2, 3, 4 hours in the evening or so, again for 1 time, go through the entire answer. Obviously, you must have the question with you at that time. And then after 2, 3 days, again the same question. Again after 2 days, the same question. Because few topics are really rare one, and you have to do practice in this sense only. Because you will not have so many questions for this 5,600 or 8,400 kind of adjustments. Okay? So with the optimism that you are going to revise it and doing your best, let me have a break with, as usual, very good wishes that wish you all a very happy day. Take care, stay safe.